Hello and welcome to our Quantvestor Investor Committee for November 2022. We will start talking about a little bit of the outlook between the markets and the US markets particularly. The Dow Jones Industrial Average, one of the biggest indexes that we have within the markets, registered one of its best months since 1976. Within a negative and so far negative year for most of the indexes and the equity indexes itself, the Dow Jones registered one of the best months for October, ending a week with a performance of 5.7%. This gives a little bit of hope for a possible recovery within the market, but we have to see and take into account the other macroeconomic events that have been occurring within the market. US stocks finished higher for the second consecutive week. Along with the previous news, we are seeing here how the Standard & Poor's, another of the main indexes that we have for the US market, registered profits for the second consecutive week. As you see, the ups and the up trading days have been higher than the down trading days. So this is getting a little bit more of expectation of a possible recovery, of a little bit of moving upwards for the index within a year at 2022 that definitely has not been so positive or so kind with markets. This week as well, we have the Federal Reserve meeting on Wednesday, where it's expected, and most of the analysts expect, that there will be an interest rate hike of 75 basis points. There's also an expectation on how Jerome Powell will address the investors and address the other members of the Fed regarding the pace the interest rates will have for the end of the year. What it is believed, and what most of the analysts, around 80% of them, believe, is that the pace of increments within the interest rate will start to be lower and to slow down for the end of the year, taking into account that inflation rate and macroeconomic events all around the world are giving somehow signals of possible alert within the economy and to avoid a possible deeper recession within the US. Here we have the 5 big technology, the tech companies that have shed some of the 3.6 trillion in value. The earnings season is moving on, and with that said, most of the technological and the big tech companies have already reported their utilities and earnings for the third quarter. And here you see how Apple, Microsoft, Alphabet, and Amazon have outstand within this particular sector, moving ahead of what was once the star of the technological sector, that was Meta. So here you see 4 of the biggest companies moving with a really good earnings season of around 3.6 trillion in value. Along with this, ExxonMobil, one of the biggest oil companies, posted the highest profit in its 152-year history. As you can see, it was the biggest profit for the company, around $50 billion. And even, if you sum up Amazon, Procter & Gamble, and Tesla's results or earnings, it would be greater than the 3 of them combined. So it was really, really a positive result for the oil company for the year, for the third quarter. There's a hope that November and this new month will bring some of recovery for the markets. It is said that November has been the best month in the past 10 years for indexes and for US indices. As you can see in the chart, November has always been a sort of a recovery, even in really downtrend years. So we will have to see if this November of 2022 will also be, and it won't be the exception of the rule. We will have to see if the macroeconomic events, how the war is developing, how the inflation and the inflation crisis or the global recession crisis keeps moving forward, and as well the posture that the Fed is going to take regarding the interest rate hikes for the end of the year. Now moving to the results that we had within our portfolios, we're going to see the results for the Quantvestor US 500 portfolio. Remember, this is our US equity focused portfolio, the largest one. And as you can see, this is sort of like the summary for the performance of this particular portfolio. The largest historical loss the Standard & Poor's and Dow Jones have registered is above the 30%, and for our portfolio is only for 14%, sorry. And the performance comparison, as you can see, year to date, the Standard & Poor's have lost almost 18% of its value, and within our portfolio, we are almost flat. We're getting only a 3% down for the year. Here, as you can see with the historical performance, that minus 3% of the year is attributed as well, and the result of October in particular, the 4.36% that you see here, has helped to the overall result. And this month definitely was a positive month for our portfolio, a stability within the market, a little bit of higher volatility that we have hedged on, and this giving a result, a positive result for the month. If you see, here is a risk comparison graph that we wanted to show you, where we compare our portfolio, the Quantvestor portfolio, against two of the recent crises that we have had within the market. First one is the COVID crisis from last year. As you can see, largest and one of the largest downtrends for the Standard & Poor's against an stability and even an upward trend, slow pace, but it was an upward trend for the Quantvestor portfolio. And now the inflation crisis and global recession crisis that we are living on, obviously Standard & Poor's have been hidden and have had a really negative year or past month. But our Quantvestor portfolio has stayed really calm with a stability and in a pace that is almost flat for the year. As you saw, we have just a negative performance of 3%, but we're expecting that November and December will have positive results that even will take us for a flat year or even for a positive year. Comparing our portfolio, the Quantvestor portfolio, against not only the Standard & Poor's, that is our main benchmark, you can see here a comparison against the hedge fund index, one of the biggest, the largest ones, and the Warren Buffett fund from Berkshire Hathaway. So here you see that also, our performance has been above all of them. Really on the last, this year and the end of 2021, with a relative calm, but staying stable within a market that has been really, really challenging. Now talking about our strategy, and here is a summary or analysis that we do with the VIX index. You know, this is the index that measures the volatility within the market. For now, there's no alert. We have said in the last committees and webinars that the range within the VIX is around 25 to 35 points. And now we're heading towards the lower part, towards the support line that we have on the 25. That will be the alert zone that we will have to control for the upcoming weeks. But for now, we don't see any attack or possible attack for any of the, neither for their support or the resistance. Now, this is a really interesting analysis that we're going to see for the Standard & Poor's regarding the moving average. In the day chart, as you can see here, the Standard & Poor's is moving really close to the moving average of 100 days. It is also one of the key levels for the index, that is the 3,800 level, that is trying, the index is trying to attack it, but for now, it has been really, really tough to break it upward. When you see the weekly chart, you see as well a really, really hard retracement of the index from the latest and the last maximum level that we have above the 1400. Retracement that is now taking the Standard & Poor's near the 200 moving average. Again, a little bit below the 3800, but taking into account that this is a really key level for the market. The next level that we will have to monitor or to take really pay close attention will be within the 2500 and the 3000. But this will mean the index will have to do a retracement of almost 30% for the next year or the next upcoming month. For now, we will have to wait and see and control the 3800 level really close. Thank you for being here. This was all of the news, macroeconomic events in our Quantvestor Investor Committee. We will see you next time.